What's up, Chris? It's Tuesday.
Let's go! Happy Tuesday to you, Jay, and happy Tuesday to everybody out there who watches the show or listens to the show. Be
Just,
that on Tuesday
just
or
another
any
Tuesday.
other day. This one really couldn't be much more of just another Tuesday. Um, welcome everyone to the Practice Playbook, the show where we help firm owners and wannabe firm owners navigate the road for their modern firms. I am Chris Geno. He is Jay Kimelman, and we are here to guide you on your journey. Last week, we talked about the recent election. Not that way. We talked about the recent election and some of the impacts that it might have on you and your practice. We gave you some insights and some tips and some things. Mostly, be patient. Don't go crazy. Wait until we get real news. This week, we're going to talk about some of the recent tax strategies that you may have seen online. We'll highlight some of the reasons why I use quotation marks and what's bad about them, and what to do or what conversations you want to be having with your clients when they bring them to you as this magical opportunity that they just have not been able to. They don't understand why you haven't implemented for them yet. So we'll talk about that, and we'll talk through some of our thoughts about those things as well. But before we get to that, let's get to the news. First. If you are an EA, and you're in a certain subset, I don't think it's everybody, but it may be it may be. Jay, you can elaborate more on this. I think it's P10 update time. So I think your P10, that's your is it personal? What is it?
Personal tax identification number, and actually anybody that is a registered tax preparer, that would be an EA, a CPA, or anybody under the registration program for tax preparers has to have a P10.
All right. Well, so if you are one of those registered people, be that EAs or CPAs or otherwise, your timeline is to do that by the end of the year. So it's update time. So make sure to do that before 12/31. You got about a month now. Also, in tax-related news, the Tax Advocate, we've talked about them now. It feels like they just are making news all the time, but they're out there advocating. And in this case, they are advocating and supporting paying out low-risk ERC claims. And so I think most of us would understand why that would be, right? If it's not expected that this ERC claim is going to be fraudulent or going to be something that the IRS is later going to have to claw back, it's best to go ahead and give that money out, right? Let's get it done. Let's get it resolved. I think I agree with once again, I agree with the taxpayer advocate on this one. In that, like, the reason that people are applying for that ERC money is because they're hurting in some way or another, right? They want to be able to assist in funding their operations. They want to be able to use that capital for something here as we get into the end of the year. And so I agree with the taxpayer advocate. Come on now, IRS, ship that money around. Jay, do you have any thoughts on this?
Yeah, I want to know, how are they measuring risk to come up with low risk claims?
Oh. See,
is it based on who the provider is that's submitting it, who had done it? You know, we have all these mills that are doing these claims, but they're still having you file them because it's still difficult to file amended 941s. So I'm just curious about that. And now, from the taxpayer advocate position, I would assume that they are getting a lot of phone calls regarding claims that haven't been paid. And
I'm sure that's true.
I would almost bet that those that are calling on them are non-fraudulent claims and are low-risk claims.
You would think so.
I wouldn't put it past somebody to call and say, hey, where's my $4 million claim? I want my money.
Yeah.
You know?
I need my fraud money. I can't keep my fraud going without my fraud money.
Right.
I'm sure that's probably true. Jay, I didn't put it in the news here, and I regret it because I just forgot to. But I saw an article, or at least a tweet, that the IRS is using like a lot of different AI technology. So maybe their AI is identifying risk or something like that. I think it was something like 30 different programs that the AI that the IRS is using that include AI in some capacity or another. That seems like a whole lot, given my personal experiences with the IRS. But maybe seems like maybe they're just maybe they're in whatever, like in beta or something. Like they're just not quite ready yet, but they're working on them. I don't
Well,
know.
I sure hope that AI technology doesn't hallucinate with the IRS, because that could create some issues.
It definitely could.
Yeah.
And speaking of creating issues, Jay, if I remember what's coming next here, you have a special IRS story of your own.
Yeah, and I'm curious if AI has gotten involved in this. So
Mm.
for one of my companies, it's a sole proprietorship. It's a single member LLC, not a tax entity, but a legal entity. We'll get into that later.
Mm.
And as such, I had my 17-year-old, actually she was younger at the time, on payroll back in 2021. And for 3 quarters, I've gotten a letter saying my 941s were wrong. I dealt with quarter 1 2 years ago. And now I'm dealing with quarters 2 and 3. And basically, I responded to them and said, hey, this is my own child under the age of 18, and there are no payroll taxes in this situation. And they agreed and wrote it off, removed all the penalties. And now 2 years later, I'm still dealing with the same issue, even though I said this will remain until my daughter turns 18, which is on such and such date. So they never updated their files and never dealt with it. And so the letter says that they're responding regarding an inquiry received August 8th. So
Okay. 90 days ago.
it's, 90 days ago. And actually, I got a letter 30 days ago saying they needed an additional 60 days. And now they're requesting an additional 60 days.
Oh my.
Because this is a very difficult solution and they need time to provide with a complete response. So maybe that AI could help them with that.
You would
And
think so.
yeah. I mean, this is not something that is unknown, not something that is out of the ordinary. We filed the 941s in accordance to the law, and yet they came back and says your 941s are wrong. Actually, I got a letter that my W-2s were wrong also, and dealt with that when we dealt with quarter 1. And yeah, so we've dealt with that. Now we're dealing with later in the year. So it's frustrating. So yeah,
It sounds like sounds like the taxpayer advocate is out there helping you out, because I know last week we talked about,
might need that, but yeah, I mean,
yeah.
here's my letter right there. So
Oh my gosh.
yeah, came yesterday.
Gosh.
Yeah.
Be better.
Yes.
Be better.
And
Any other tax related news, Jay?
All I can say is we need the funding for the additional technology so that we can, utilize that AI and implement it and make sure it's working correctly and properly. And let's hope that, and that's like the last named director or cabinet secretary that has not been named yet. So we're waiting for this Treasury Secretary to come out. Mm-hmm. So hopefully, we'll be okay when it comes to that, because me and thousands of other tax preparers and professionals have to deal with this agency, and we need it at top performance. I mean,
that's right.
We're 2 months away.
I feel like we should get you to say that in a little 30-second thing, and then just like loop it back in every week, because I know
we could do that. We can do that. I could use AI to clip that out, and
there you go.
Pop it in there every week.
Pop it right in, and then the IRS can really figure out how your AI is working there. Yeah.
Yeah, for sure.
So that is this week's tax news.
Yeah.
In other accounting news, I think I might introduce a recurring segment of PE Financing Corner or something, because it seems like every week there's yet another firm taking on a little bit of PE money. That happened again this week. It looks like CRI and PKF, they both got that money. And according to an article that I read, a separate article than the one that talked about those, we're now up to over 10 billion with a B in fees generated by PE or partially PE owned firms. So that is a big investment. Now that may be counting like a very small amount in like KPMG or something. I think they may have, or Grant Thornton or whoever it is, one of those gigantic ones. But whoever, the maybe BDO, I don't remember, it doesn't matter. But 10 billion still is a big number. That's a really big number. So PE is very clearly going to be here for a while, and going to be here to stay. So if you haven't, you should probably understand what that impact means to you, and how it impacts both your own firm's performance as well as your ability to hire employees and all of the things that go along with that. So more PE in accounting, ongoing segment. Also, this week, it sounded like the AICPA announced that they were expanding access to their Experience, Learn, and Earn program. And Jay, it's been a little while since we talked about that program, but we talked about it previously, where it was a program that the AICPA and NASBA had introduced to try to make it easier to become a CPA. And instead of needing a certain number of credit hours, I think they changed that credit hour limit down a little bit and said you can work for a little bit longer. And so they're allowing some more people into this program. I think they were doing it as a test run first, and now they're expanding it up. And we've talked about that on the show previously too. Obviously, getting more access to people who can be CPAs is a great idea. Making that career path an easier one is, in my opinion at least, an extremely good idea. And in fact, I kind of think that the rules around hours requirements and all of that kind of stuff is kind of shenanigans, because you have to take a really complicated test. So like, you already have like a nice barrier of entry that just exists there. Any extra barriers of entry kind of seem redundant past that one, at least from my perspective. So good job, AICPA. Keep it up. Expand it more. Keep going.
I mean, work experience is so much better than meeting an extra 30 hours of school. I mean, come on.
Totally.
Really?
Absolutely. And I'm glad that they're coming around on it. So keep it up. Keep it up, AICPA. Good job. In other accounting news, the FASB wants your feedback. They want to know some information around financial KPIs. So it sounds like the FASB is exploring KPIs that are recorded in financial statements regularly, and wants to provide them maybe consistency or some rules around that, so that if you're looking at certain sets of financials, that you're getting the same KPIs. Now, Jay, this isn't stuff that we've talked about on the Ecom Hour, where we're talking about ROAS and stuff like that. This is like EBITDA. We're talking like super basic KPIs, and so they want to make sure that there's consistent treatment. In the whatever, I don't know what they're called when FASB makes these requests, the inquiry request or whatever. In that document, it said, like, there's 30% of people that report their EBITDA, and 30% of people, or 20% of people that have an adjusted net income, right? And so, you do want for investors, you do want users of the financials to see the same thing. This is one of the like core fundamental things about financial reporting, is that you want comparability. That's the whole point of GAAP, right? Is so that if you look at one business and you look at another business, you know that they are built in the same way. Like those financials are consistent. And so this is a layered into saying, you know what, people don't care as much about the numbers anymore. People care a little bit more about some of the metrics that come out of that, and some of the more tailored and granular data that other people are using too. And so,
especially when you're right-sizing numbers by using those KPIs. I mean, you're then right. Comparing apples to apples versus $5 trillion in revenue here versus $2 million here. And there's such magnitudes in there. So if you bring it down to common size, it makes it so much easier.
Right. And that'll and I think again, and once you allow consistency across that, it just makes you can compare a big manufacturer to a small manufacturer and say these are some of the like important things to know about this business.
Yeah, sure.
So I know, anytime we're introducing regulation and extra rules, sometimes we get frowned on that, right? But in this case, the intention is financial statement consistency, and so these rules may actually be positive. Now, they're not all that positive if it's like you have to report EBITDA in the same way. Like, that's lame. But let's we're going to get down to like some of those more critical KPIs, the things that people are truly monitoring, and monitoring really closely. That Adam, big proponent of. Our folks over across the pond, or more, everywhere but the U.S., at the IFRS or IFRS Foundation, that they have offered a sustainability risk guide. Now, I didn't read much about this. I just saw the headline and was like, oh, that's kind of interesting. I like when the like standard setting bodies like issue some guides on how to implement stuff. And we've talked a little bit on the show before about how sustainability and some of those governance related initiatives are going to get more complicated, and give people opportunity to be a better advisor, to be able to interpret financial information in ways that can become powerful to the users of the financials. And this guide is likely a very good place to start, especially if you have any clients that are reporting on international standards. So know that that's out there, and especially as it comes to sustainability, I think that's an important thing to think about. So that risk guide, it's out there, it's real, it exists, and it was issued by the Governing Bodies Foundation itself. So that's a pretty good source. Any thoughts on that, Jay? Yeah, sorry.
No? Yeah, not my deal.
Yeah, I read. I read, and this actually is your deal, right? So this is right in your wheelhouse, Jay. Accounting Web, which is one of the websites on my Feedly feed. So shout out again to Feedly. I saw a headline, and it was a good, catchy headline of accountants improve revenue by 11.5%, and I was like, yeah, let's go. And I thought actually it meant like they were improving their own revenue, so they were like doing like if by adding account, like because the article title was "Small Business Bookkeepers and Accountants Improve Revenue by 11.5," and I was like, oh, okay, yeah, let's go. So small business accounting, this way to go. But once I got into the article, what it actually said is that those accountants actually help to improve the operating results of the small businesses that they serve by 11%. And I was like, let's really go. Now that is a value add point there. And so they have a research model that they use to develop this information. And what they said was like good quality accounting helps to improve the top line revenue. And Jay, I think that for companies like HighRock and anyone that is out there listening to us today, like this is your selling point, right? Mm-hmm. When you have good, valuable financial information, when you can make decisions timely and accurately with the information that you have, you can be more profitable. It's right there in this research. So I thought that this was like a super interesting point, and one to remind and to reiterate today, because it is important to remember that we're not just doing things behind the scenes. By doing those things behind the scenes, we're empowering business owners to grow their business and to make it better. So.
But we're doing it behind the scenes timely. We're not doing it 90 or 180 days in arrears. We're doing it in real time. And I'm going to get into this a little bit later, but talking about some of the services we offer, and what I like to do is when I'm with a client, and they're mostly e-commerce clients, so it's all product related, is look at product mix and product profitability. And okay, so you're making more on this product, you should be targeting these with your ads, not these other products that you're not making as much, and things like that. So it's having those conversations is what gets you that 11.5%. And what they probably didn't talk about, they probably increased overall profit by 20 to 25%.
Yeah, I did not see that in that article, but I bet that's true, because when you're increasing the top line, you're certainly having an impact on the rest of the business as well.
Most definitely, making much more efficient.
Keep up the good work out there, everybody. You're making a difference, even if you don't always feel like it. I probably should have ended the accounting news segment with this one, so fail on me on the order of the news here. But in good news, the PCAOB, I brought up what's been several months ago now, but the PCAOB issued some new rules around requiring auditors and the such to opine also on risks and whether or not there's non-compliance risk, and they got a lot of blowback on that, and rightfully so, because that's a completely it really puts the auditor in a really difficult position to be able to say that, because you just really can't. And And so they got a lot of pushback on it. And so the PCAOB has finally folded. It took them until November, but they have finally said, you know what, just kidding. We're not going to enforce that this year. So they have put that off at least for this year, which again, like that particular standard is one that is very, very, very difficult to comply with properly, because it's just something that you cannot know as an auditor. You are absolutely going to have to rely on management to give you some impact of like future risks and that kind of thing. And there's only so much that you could even do to explore whether or not management has done enough there. So I'm glad that the PCAOB like came back on this, and hopefully they like, revisit it all together going forward. But we will see. And that now is the accounting news for the week.
I mean, is it really accounting news if there isn't a PCAOB story in there? Come on.
Yes, good point. We've got to drop the PCAOB in there somewhere.
For sure.
At least it's not just me getting mad about people misinterpreting what they're saying. Not this
Exactly.
time. Not this time.
Throwing it out there.
That's right. And then finally, finally, in tech news, there wasn't a whole lot of like significant tech news this week. It was just another recurring segment and section in that everybody and their cousin is once again touching and dealing with AI. Our friends over at PwC, they have invested some funds in an AI and accounting fellowship. So they are following the they are following the path of all of their Big Four brethren, and investing in AI and AI research themselves. So good job by PCAOB. I think they're the third of the four that I've seen an article about. So it's just a matter of time, and Grant Thornton will be on board too, if they aren't already. And then another smaller firm actually opened up a dedicated AI website. So for their own like web pages and their white papers and all of that kind of stuff, Witham, which is a middle-sized accounting firm, I've recognized the name. They opened this dedicated website, and so shout out to them, witham.ai, where you can go find all of their research around AI and some of the implications that go along with that. So those are accounting firm investments in AI. More broadly, not surprisingly, and Jay, I think that you know this too, right? AI is speeding up the software development cycle. We kind of talked a little bit about that last week, about how in building out code, AI can be really helpful in making that process easier. It can allow you to build your own automations to make things happen faster. And so I read an article that talked about how that is true across the entire accounting software development cycle. And so what that does mean is that you can continue to see advancements throughout how things work, how things get better, and how fast that happens in comparison to what you probably have in the past. So be aware of that and know that that's happening, and that it's going to keep happening fast.
Last week when we had our automation segment, did I talk about me building an app from AI?
I think so.
I told you directly, but I don't remember.
Yeah, I don't know if it was on here.
In an hour, I built an app, put the entire infrastructure on my laptop, built it out with Claude in less than an hour, and it's amazing what you can do.
Yeah, and that's just an individual on the side,
right?
Can you
exactly
an entire software engineering group that's now empowered with the same sets of tools, and can use all of that as well, and maybe even more powerful tools than like basic version Claude. Like we're going to continue to see change, and it's going to be rapid. So what I would say, like as an interpretation of this, right, is if there's a feature that you don't like, or a feature that you want, or something that you saw in one accounting platform that you don't really like that accounting platform overall, but you like that feature, like bring that up to your rep, right? Let them go up the scale there to allow their developing team to maybe introduce something that's like that. So make sure that you're providing that feedback to the accounting software support team for the ones that you use, because they're going to have an opportunity to be able to implement that faster now than they probably have in the past. Another couple AI tools out there. So Trace is what I think the name of it is, which is an analytics tool, and then Vero AI. They're introducing new AI tools, just like a lot of other people. I thought these, because these are analytics companies, I thought that it was interesting to at least highlight them here, because data analytics is an area where AI is going to get a lot of utilization. One of them is just an assistant tool, right, which is a really common introduction of AI to a lot of the companies that we talk about here that are introducing AI. That's how they do it. That's what Trace was doing. They're introducing an AI assistant. But Vero is actually introducing a specific tool. So they're they have an AI tool, not just a little like chatbot or whatever, for governance, risk, and compliance. So to all of that stuff that was related to the PCAOB or to IFRS folks, Vero may be a tool that can help you to be a little more compliant in that space. And then finally, I was really actually very, very, very sad to read a report from Audit Board. An Audit Board indicated that 61% of internal audit leaders lack AI experience, with only 2 to 4, that's single digits, and less than 5 of internal audit departments making progress with AI initiatives, which just seems inconceivable to me. And on top of that, 50%, 50, I have made no effort at all in AI implementation and initiatives, and I just can't even believe that internal auditors are doing this. Like, you're really setting yourselves up for long-term failure by not being active and investing in this area. And if nothing else, you definitely need to be making some progress. Come on, internal auditors, step it up. That's a bad look.
Well, they talk about AI taking jobs, and AI is not going to take the job of the auditor. It's going to change the job of the auditor,
right.
And they're going to have to know how to operate AI, and if they don't, it's going to replace them.
Right.
So get with the program, jump into the AI, play with it. I mean, there is so much it can do to help, and the right now the opportunities are endless, and just play around with it and see what you can do.
That's right, and by doing so, you'll make yourself like one of the top 95% here, because nobody else is doing it. So you might as well. I mean, you can't be doing any worse than everyone else. So yeah, definitely take the opportunity. If you are in internal audit or you support internal audit, take the opportunity to understand there are lots of ways to integrate AI and AI systems into your workflow to make it easier for you and make your job easier, not harder. So definitely be looking into that. And so that's our AI tech news. But Jay, we have some very special tech news today, because at the end of last week, you were traveling. Can you tell us a little bit about what happened last week?
Yeah, I was in Chicago last week for the Chicago Zero Roadshow. So they did a limited number of roadshows this year. They did Denver was yesterday, which was the last one, and they did Chicago, and before that they were in Houston. And I got to talk about CAS, and you talk about standardization in accounting. I mean, right now, how many different, I don't know why my camera keeps going out of focus, but how many different definitions there are for CAS. Client accounting services, client advisory services, client accounting and advisory services, cloud accounting services. So, talking about that and how firms can implement it. And that's kind of where I went with that product mix as one of those advisory things that we do. We want to make sure, wow, it's glitching out. Wow, it's really bad. So, so that was part of it. And they went through a lot of the product releases, and there were a few new releases they covered yesterday or this week at the roadshows, and just talking about the future of the product. And there was a lot of excitement. My session, there was so much engagement. It was great talking to this group, and it really jazzed me up and got me going and got me through it. And we had great conversations with a lot of accountants and bookkeepers, and of course with the zeros. But I think and talking about AI and advisory, Xero had purchased a software called Sift, and that was the hit. There were 3 team members from Sift there, and it's like every session hit on it because it just intertwined into everything that you do. And talking about CAS, part of that is delivering your deliverables, and those deliverables are reports, KPIs, dashboards, analysis, and it's all in there. So I just want to throw that out there. It's a great product, and I had not seen it in some time, but I did use it. I was an early user tester of the platform, and I mean, it was so early that the CEO done my demos and onboarded me into it way back when. So caught up with him at XeroCon. He was actually one of the people I interviewed, so that was fun. But can't say enough about Sift, and now that it's going to be part of Xero, and I just think it's just going to elevate that platform to the next level. So went through the roadshow, went through all of that process, and so looking forward to the next Xero event that we get to go to, and
All right.
Yeah.
Well, what is next? Do you know what's our?
Don't know. I'm waiting to hear about the next XeroCon.
XeroCon. All right.
Yeah.
All right. Well, that will be fun. Exciting news. I'm also very excited to learn a little bit more about Sift. I saw that at XeroCon, and so I knew I got to see a very basic version. But anytime that you have those financial reporting dashboards and KPI support tools and all of that kind of stuff, it can really you would never really think about it, right? Because you don't think about that though when you're looking at a set of financial statements. Like, that's kind of what you see as the information, but you don't really think about how much more valuable it can be to your clients to have that like dumbed down a little bit or shrunk down a little so that it's in a little bite-sized package or a nice little picture, because that's just not the way that you're used to seeing it. And so I'm sure we'll talk more about Sift as we probably start to use it as it's coupled there with Xero, and get to see all the cool other functionality of that, as well as probably some use cases of how valuable it can be.
And I think the best part of it is, based on the team, like our team is e-commerce, we can have a standard set of deliverables, and then if there's a need for something else, we could easily throw it together and have it standardized across the board there. But it's easy to repeat it month after month because you build it out once, and now you have the consistent flow from your GL into the platform, and now you're delivering that to your client. Now you get to do and have those conversations, which help raise revenue by 11.5%. So
absolutely.
Yeah.
So just another tool on the way. Shout out to Xero for continuing to work with accountants and be thoughtful of what accountants need. So good job by you, Xero.
Most definitely.
And that is the second half of tech news today. On to our main topic. I know you've seen them. I know, or if you haven't seen them, you definitely know someone who has, or you've seen somebody like retweet one and make fun of it on Instagram or TikTok or whatever. Some accountant or accountant type like is repping that you're missing out on millions of dollars by not implementing this like little known tax hack. Right? Often they tell you should make sure you're an LLC or make sure you're an S-corp or whatever. Right? They may say they know some way that you can write off more than you really think you can. Right? And so Jay this past week did some diligence. He attended a webinar related to one of these products, so that you didn't have to, right? Jay did this so that you didn't have to, and part of what we're going to talk about today is what Jay learned, as well as some other things that we've seen kind of floating around that we want to talk about and make sure that you're aware, like, hey, they're out there in space. Know that people are talking about this, and so Jay, do you want to give a little more background to what you did?
Most definitely. So I'll jump back a couple of weeks. So it's like October 16th, I started seeing ads for, hey, who does your CPA work for? Do they work for you or the IRS? Or are you getting all your due? And it's like, you got to put your tax saving strategies in place now. And it's like, okay, I'm looking at them and it's like, all right, bring it on. Let's see what you got. And I started looking at some of them, and, we've come a long way from, hey, go buy a G-Wagon and deduct $90K. And it's like, well, how do I pay for it? Don't worry, it's a deduction. We've come far from that. Now it's, hey, my LLC pays more in tax than an S-corp would. Well, guess what? Your LLC doesn't pay tax. And your LLC is a legal entity. The S-corp is a tax entity type. So you're not talking apples to apples. So, and that ad was by a freelance graphic artist pitching for another company, a online bookkeeping and accounting system that is having a Black Friday sale of all things. Save a whole month. So that caught my eye. And then another one was, hey, you got to bounce your LLC. You got to go and form an S-corp. It's like, well, actually, you don't have to bounce your LLC. You just take an election and make it an S-corp. We got to look at the differences between what we are looking at from the entity standpoint. So the legal versus the tax, two very different animals, because you want to have that protection of the LLC, and then you want to look at how to properly structure your tax. And the one for this company, they had another guy today talking about you'll save $10K by having an S-corp. And basically the example was $60,000 in profit, you're saving $10K. It's like do some numbers. And so, we're not going to mention names. It's just, awareness and what we are actually trying to do. I want to meet with my clients, look at what they're doing, and discuss real strategy. Not every client can afford a rental property so that they can go out and do a cost seg and over-deduct, and offset their wages from their W-2. Not everybody can afford that. And I want to give real strategy, not rope them into a gimmick strategy to get them into being a real estate investor or a slumlord or whatever it happens to be. And in most cases, they pitch you to be a short-term rental. So basically turn your property into an Airbnb, put it in an S-corp, and then cost seg it, write it all off, use the accelerated methods, and then there you go. But what happens when you've written it all off, you have no basis, and then you sell it 10 years later? That capital gain, you have no basis in that property. Guess what? You're getting your ass beat on fucking taxes. Sorry, I had to throw out the F-bomb there. But, it's no different than going cash basis on your inventory. You don't want to do that either. Because if you do that at some point, you're going to run out of cost and basis in that inventory. And in the long run, you're going to pay the tax on it. They're only giving you short-term gains with long-term disasters. And, it's one thing if that long-term disaster happens when you have no income and you're well retired and you're in the lowest, it's going to actually bounce you up into the higher rates. But that's not what we want to do. So that led me to the webinar that Chris was talking about. Yeah. And I'm watching this, and he's going through the LLC versus S-corp example. And he says, okay, here you go. You make $100,000 and you'll save $4,000, which is about right, $4,000 to $6,000. And I'm like, okay. So then he took that number and used $1 million. And he took $1 million of an S-corp, split the income up between $400,000 and $600,000. So a $400,000 salary. And and is $400K a reasonable salary? It might be, it might not be. Depending on what the job you're doing, $200,000 might be good, but still. So, but the thing was, on the $1 million in the sole proprietor, he was booking 15.3% on the entire $1 million in profit. And we know that the 15.3 has a ceiling.
Yeah.
The FICA limit. Well, you
That's
still
right.
pay a few percent, but
Right.
his difference was $85,000. I mean, it's like not real, not going to happen. So understand what you're talking about before you present it. Actually, use the tax software to make your examples. Don't just throw numbers up in Excel and put them on a screen in a beautiful chart and make it not make any sense. So, it's like it's driving me nuts, and I'm actually going to do some videos disputing these. I just don't have the time right now to do it. But
Sure.
it might come out this weekend. I might very well do that. That is if I
There
can
you
get my
go.
camera to stop glitching. I don't know what's going on. It's driving me nuts today. So
I was like,
then it's like this guy had 3 different strategies. This was one strategy. The other strategy was, well, you're probably missing about $85,000 in expenses in your business. And he goes through ordinary expenses, and it's like, well, you should be deducting cost of goods. That's $12,000. You should be deducting office supplies. You should be deducting expenses like rent and telephone. I'm like, come on. Where did you get your bookkeeping degree, your accounting degree? I mean, most people are not going to overlook normal expenses. So
no, you wouldn't think so.
it's like, okay, number 2, out. And then number 3 was stratification and diversification of your expenses. And it was more like trying to avoid commingling is really what it was. And basically, if you have a cell phone, you should be allocating part of it to the business. Oh, man. Part of it to the business and part of it to yourself personally.
Right.
And it's like, you could pick up another $5,000 in expenses by doing this. And it's like, I mean, this is your webinar. And I mean, they did offer, it's like, it was a super cheap deal for bookkeeping and a tax return for the year. I mean, it was less than I would charge for a tax return itself.
Right. Yeah, and so that's a reason to be cautious.
Most
right?
definitely.
Because, there are lots of different hooks that folks that are out there on the internet will use. Right. Save hundreds of thousands of dollars on tax is really appealing to a taxpayer who's paying a lot of money, and so that means that it's that much more important for us as advisors to highlight for our clients, hey, we've considered X, Y, and Z for you already. And I know that there's these things out here that do X, Y, and Z as well, right? And they're talking about doing A, B, and C. Here's the reason that doesn't apply to you. And here's the reason why you shouldn't be worried about doing that. And here's all the other things that we've thought about for you or considered on your behalf. Right, because there are a wide variety of tax strategies that you can employ throughout the year to maximize your tax savings, and I think it is important to reiterate too that as it comes to corporate structure, a decision between how you're taxed is dependent so much on the individualized business. It might be the right choice for company A, but it might be a terrible choice for company B, depending on the different situations that they're in. And so it's never just a black and white yes or no. There's always more that needs to be considered. You need to look at the holistic picture of the company and the business owner's tax situation.
And if it's a pass-through, you have to look at the business owner's tax situation. Because this could be a side hustle. And they're making $200K on their daytime job, and yet they're running an e-com store that's a sole proprietorship. There is no self-employment tax because they've gotten paid over the FICA limit.
Yeah.
So there's no reason to be an S-corp at that point.
Right, and so it is, and that makes it that much more important for you to reiterate to your clients. Here's the reasons why these things are happening. And it's also important to understand that there are people out there that are saying these things so that you can respond to them and so that you can be aware of that. Because like Jay mentioned before, lots of times in these situations, the savings that someone calculates, they might just be calculated wrong altogether. And so if you have the opportunity to be able to utilize your tax software to say, here's option A and here's option B based on the actual facts of the situation, and here's what your end result is, like that gives a better answer to your clients. And it makes sure that you do understand both their company and their own full tax situation. It's really, really important. Um, Jay, what other things have you seen out there that you wanted to talk about today? Any
So
other like
the other one I saw was, hey, there are multiple types of LLCs that you can decide to have. The first one is a single member LLC, and you decide to be the only owner in that in that LLC. And then the other type is a multi-member LLC. Well, you don't determine that when you form your LLC. You form the LLC, and if you are the only member, you're a single member LLC. So you don't make a decision about that at that point. You just set it up and run with it. Now, what happens, you start out on your own. You file a Schedule C, or you elect an S-corp at that point if you wish, and then that income flows through to you. Now, in the case where you bring in somebody else, we used to have an issue where you had a partnership and there was a change of 50% or more in the ownership. It basically terminated the partnerships, called a technical termination, which I think they've done away with now. But that bit a many number of businesses and partnerships in the butt, because they had no clue what they were doing. And that happened, and then all of a sudden, oh wait, we had a short year, and we didn't file. And they filed it at the normal period, and they ended up filing two, and they ended up having large penalties. And hopefully it was an issue where they could abate them, but in some cases I had an issue or two where that wasn't the case because they had already used their first time abatement for something else. So it's important to know when you have to do your filings, and if you do make a change from a multi-member LLC to a single member LLC, if you make an S-corp election in the middle of the year versus the first of the year. That was the other thing I saw was you only have until the end of October, and this was early on, to make your election to go back to July 1st. Well, if you actually thought about it and you acted as you were an S-corp all year, you can actually claim a late election when you file your current year tax return and elect to go back to the beginning of the year. So, they're putting pressure on people based on time to do it and pressure you into signing with them to get a special deal to do an S election so that you can take that back to July. But in that case, if you are doing that and taking it back to July, you have two tax returns to file.
Yeah, that's an important consideration. I think
there's a lot to it. And like you said, we have to look at every individual company and the partners/shareholders to take all that into account to make the decision. And, we run numbers on that to see whether we do it and when we do it. And, it's a lot of the same thing, looking at, cash versus accrual. Looking at that, you want to try to do that from the start, but you can make those changes. There are certain ways to make accounting changes with the IRS. There's a form, the 3115 form, that you have to file, and you have to calculate the differences. And if you're going from one method to the other, you might be paying that tax when you make that election to make that change. So there's a lot that goes into it. So we really want to look at that and start out on the right path. And that's why reaching out to your tax advisor or even your business advisor like us up front is the way to go, because in the long run it's going to save you money, and we're going to help you earn more money. So there you go.
That's right. That's right. And so if you're an accounting firm owner or a wannabe owner, right? The important thing to take away here is that it is important to understand what people are seeing. So it is important to know, I saw XYZ strategy on TikTok. How compelling is this? How real is this, right? You need to be able to respond to those questions. So you need to make sure that you're you're exploring it a little bit or listening to something to make sure that you're getting that information. And then you need to have a response, right? And you need it to not just be like, no, you can't do that. You need it to be more thought out. Like, people want to understand why. And especially as business owners are making key decisions like this, they need to understand why that's a key decision. So you need to talk about all the implications that Jay just laid out. They need to understand how that will impact them both now, like Jay was talking about, but also, and probably more importantly, how it will impact them in the future. Because exactly like Jay talked about, sure, there are some situations where you can get a massive deduction right now. But if you do that, you may be putting yourself at risk to pay a significant tax burden in the future that you may not have. Or you may not have the funding to fulfill, or you may have to pay way more than you would now if you just handled it a different way. So it is really important that you understand all of those risks as well, of like not just how it impacts you now, but also how it impacts you in the future. And then finally, I think it's important that you continue to show that you have that value and that you understand those things and that you can talk about them. And so that is why it's important to both be well researched in what those issues are, as well as in how to respond to them. Because when you bring it up to your client of, hey, I saw this thing, I know you're often on XYZ site, and you're often scrolling through X, right? Or I know your daughter's on TikTok, and I know she loves when people bring up the G-Wagon strategies. Like, look, I saw this one the other day, and I want to tell you, like, I understand that hey, that sounds awesome, but here's why it wouldn't apply to you, or anything like that. And maybe depending on how your practice is structured, maybe that's something that you can incorporate in a regular communication to clients of debunking tax craziness, and a newsletter or a summary that you send out to folks of, hey man, this one was really crazy, and I think you all need to know about this because I know that this is something that if I saw it, I'd be asking about it, and it would be something I'd want to know about. And so there are lots of different strategies also to how you communicate that to clients. And it is, I think it's important, like Jay mentioned, that every situation is different. Like, it might work for some people. Like, it may be the right answer for a certain set of folks, but there's definitely some where it might not. So understand what's out there, how it can impact people, and how it will impact them both now and in the future. Jay, do you have any other thoughts about these crazy tax strategies that are out and about?
Yeah, if it sounds too good to be true, check with your tax advisor.
Probably is.
I had a client come to me and he wanted to set up a C-corp. And he basically said that he was going to set this up and run certain expenses through it, and that way he can offset the income over here. And I said, where did you hear about that? He said, in the line at school waiting to pick up my kids. And I'm like, okay, here's the problem with that. Well, what he was going to do was pay himself and his wife through it only, and then increase their retirement savings. Well, the problem with that, it had common ownership with the two other businesses that had all these employees. Yeah. And based on attribution, they're all in one pool.
Still counts.
So, still counts, yeah. So I said, I'm sorry for your friend in the school line, but yeah, it's going to catch up to him because that's not going to work. So, yeah, there's so many things that, it just, like I said, if it seems like it's too good to be true, check. And, that's what it's about. Get good advice. We're not here trying to help the IRS. We are here trying to help you. The only thing I would have helped the IRS is get the information so that they can give you your money back. That's it, because I don't want to make any more phone calls to the IRS. I think we talked about that last week. It's not fun, getting through and then having the discussion and getting cut off and having to call back and basically being told, oh, you don't have the right information. Well, I had it 5 minutes ago. or 2 hours ago, depending on how long that call was. So,
Right.
It is in our best interest to help our clients. We're not helping the IRS. So,
No.
yeah.
No, to circle everything back and put a nice little bow on it, our goal is to increase your profitability by 11.5%, like those folks that we talked about before. Like we're in it for our clients, definitely not for the IRS.
And to keep more of that 11.5% in your pocket.
That's right. We want
For
that to go
sure.
to you, not to the IRS. Absolutely. Certainly, if you can avoid it, right? Obviously, there are some
Yeah.
situations where it just needs to go to the IRS, and that's just the way it is.
Yeah.
All right. Any other topics here? Any other conversation around tax shenanigans?
No, but I am sure more will pop up next week.
There's no question, and we'll be right here to tell you all about it.
For sure.
But before we leave, Jay, do you have an automation of the week?
Automation of the week. I was thinking about that this morning, and I haven't done any because I was traveling last week. But I have some thoughts on some, and
Yeah.
I will divulge a little bit of it. It's right now. I was watching TikTok, and I'm now seeing videos where people are interacting with Claude. Claude is now interacting with web apps, actually doing data entry and doing searches. And if they don't find something, they're actually entering that data into a CRM. So that is the next thing I want to work on, and I want to figure that out. So more to come there.
Yeah, that sounds.
It's like RPA, robotic processing automation, without having to do all of the training and all of the work. So it's like that was amazing, and that is what's going to take the auditors' jobs away right there.
Yeah, poor robots.
Yeah,
poor robots. The RPA's they might end up being obsolete. Tough.
Yeah, if anything, that technology is just getting better, and it's going to make it easier to set that up.
Just like everything else, the AI is going to supplement the robot, and so the robot's going to be that much more effective at its process automation. That definitely sounds like an interesting thing and something that I look forward to hearing more about too. I tried to. I'm trying to think of I didn't do an automation, but I did actually have a nice little fun Chat GPT conversation because I have been looking. We have a workout room in the house. We're really blessed in that regard, and I have been looking for something because my phone likes to die a lot, right? And so it's not always convenient to take my phone into the workout room because sometimes it'll need power, and it charges weird. And I want to set up. I want to make sure my form is good and make sure that I'm keeping a good record of the workout that I did so that I can see it easier. And some of that stuff is just so much easier on a bigger screen, like a laptop or like a tablet or something like that. And so I told Chat GPT, I was like, hey, here's kind of what I'm trying to do. Talk to me through the things that I need to be looking out for in a computer for this situation, right? And also, can you give me a budget range? Can you tell me how much it's going to cost? And so I did that, and then I tweaked it, and I was like, actually, you know what? I forgot about this. I actually want to be able to take videos of myself so I can watch my form a little bit more closely, right? I want to do that. And how can you? What would change, right? And then I asked again, okay, we talked about laptops the first time. Let's see, I want the portability of a tablet instead. Tell me what I need to look for in a tablet. And the amount of information that I got back from this train of thought and the brands that were utilized and the things that I should go look for was so powerful. It helped me. It took me. It shrunk down the search that I needed to do by really giving me something to I know what price point I'm looking for. Right, and I can kind of tailor that in as we are here on November 19th, and Black Friday is right around the corner. So I can look for some special deals on exactly the type of machine that I'm looking for, that kind of thing, right? Where I can say, oh, you know what, this has all the specs that I'm looking for, and it should have been this price range, but it's half price. So let's go. There's a lot of opportunity in being able to supplement not just the things that you do in business. Think about the business application of that same idea, right? I I need a laptop computer for one of my employees. They want to do this thing. Like, what's the best way to do this, right? Even just something that's that basic can be so much easier by using just a simple AI generative AI tool. And there's just ChatGPT. Like, this is one that everybody is at least familiar with. And so imagine, like, I say everybody, maybe that's not fair, but a lot of people are familiar with. But imagine, like, scaling that up to all kinds of different things in your business, right? And that's the type of automation and improvement that we're talking about. Is where I could do all of that research myself, right? Like, I have that skill, but instead I asked AI to help support me in that instead.
Well, instead of taking an hour of your time searching for it, it did it for you immediately.
Exactly.
But here's the difference. Did it tell you that Black Friday starts this Friday at Amazon?
I didn't ask about Black Friday specials. And so next time I'll have to do that, of what's the best time of year to look for these machines. So I did. That was a prompting fail. I'm not going to throw the AI under the bus. I'm going to throw myself under the bus on that one.
So I'm curious, what were the solutions it gave you?
So there were a couple different processors. It gave me a couple Intel processors. It said you could probably use this window, which is relatively low, like 5i, that kind of thing, and a couple AMR processors, so like the 5000 series. It gave me a couple different vendors to look for. So the Dell and HP were the first two, or not Dell, HP and Lenovo were the first two that came up. And then it also talks about Asus. And then when I asked it for more computing power to be able to record videos, it was like, oh yeah, okay, you need to look for this level of processor instead, which is basically just one upgrade. Like, it's not the top of the line, because it's not. I don't need that for what I'm using it for, right? I just need a regular plain machine. It also talked about it, and it explained very clearly, like, you need to look for this type of memory level because of X, Y, and Z, because you need to think about, like, okay, if you're going to be using multiple things at once, you need to be able to pull from these different sources. Yep. Because I wasn't going to really be watching video on it or anything like that, some of that information wasn't all that important. I talked about, like, if you want to store stuff on the machine, here's the levels you want to look at, and here's kind of what that means to you. And then, yeah, so it was like really, really surprisingly, I mean, truly, I was surprised at the detail level of the response that I got there. And then it told me the different price range. Like, for this type of thing, you should look in this range. If you wanted to upgrade it to this, you should look at this range. And then the same, once I added on that extra spec, it was like, oh yeah, okay, well, that's more like this range, and these are the things that you'd expect it to change.
Yeah, the biggest thing when going from filming video from the basic standard i5 would be an i7, and probably doubled the memory requirement.
Yeah, that's exactly what it told me. Yeah, that's exactly. It told me to go. You probably want to go from i5 to i7. You could maybe get by. Well, actually, what it said was you could probably get by on i5 if you really, really needed to, but you should probably step it up. Yeah. And then it said, like, the memory range is probably okay, but you're going to get a little bit tight in some spots if you're trying to do the two things at once. So it was, again, surprisingly informative for just hey, I'm trying to, like, put a laptop in my workout room. Here's some components of what I want to do. What should I use? Like, that was the prompt. And yeah. Detailed list. So really, really impressive. I really, really surprised by how effective that was. So again, imagine the implications of doing that across maybe your entire firm. You can go. Is it an automation of the week? Certainly not. But it is a thing to remind you. You know what? Sometimes automations are really basic, and they can be like Jay said. Like, that would have taken me an hour to do all that research, or to read like 5 articles about it or something like that. Where instead I was doing something else while I was answering, right? It took zero time. So
took as long as it took to type that prompt.
That's right. That's all it took. Yeah. So automations have a lot of impacts, and they can be small and still have big impact, which I think is an important thing to remember when we talk about automations as well. And so that's our show for today. Thank you all for listening. If you serve e-commerce clients, come listen to us on the e-commerce hour on Friday afternoon. Otherwise, you can meet us right back here next week at 4 Central, 5 Eastern for the Practice Playbook, where we talk to you and yours about how to make your firm or your prospective firm that much better. So thanks for watching. Thanks for spending time with us. See you next time.
Have a great rest of your week, everybody. See you soon.